So let me go ahead and move on to, and thanks for that, TJ. I do appreciate that. I think the one thing there that's pretty obvious too is that with all that big movement in the euro, crude, the stock market, during the year, they ended up going nowhere. But like you mentioned, there is always a lot of opportunity, regardless, ultimately, of where we end up at the end of 2012, which is always reassuring anyway. So Brian, I think we're going to go with you next. I don't think Shane's been able to resolve his computer issues yet, so let me hand it off to you, and you can project away.
All right, well, I'm going to apologize up front. I don't really have any humor built into my presentation, so I'll just throw that caveat out right away. Let me get my screen up and going.
Brian, those of us who know you well, you would never actually have to apologize for that.
Well, that's true, but some people don't know me, so that was pretty hilarious there, TJ. The Mexican peso. I wish I was that witty. All right, so you see my screen?
Yeah, you see the slide going up to the slideshow.
Cool.
There it is, gold and silver.
Very good.
Doesn't look very funny to me.
I was telling you, that's why I warned.
All right.
All right, here we go. One of my favorite markets to trade is gold and silver. It's a market that I'm involved in each and every day. And over the years, I've had the opportunity to invest in gold and silver in a number of ways, the physical and in options, the ETFs, and primarily now I trade the futures. So you name it, I pretty much had the involvement of trading these two metals in some form or fashion. So what I wanted to do was start out and kind of recap 2011 and then kind of go over my prediction that I made in this webinar last year and see where it came in at. So first of all, gold started the year at a spot price of $14.32, and by September 16th, it was up to a high for the year at $19.23. That's a 34% increase. So pretty nice move, and I know a lot of the gold bugs at that point were thinking, oh, here comes 2000, we're going to break it and sail on to 5,000. There's a lot of dire predictions that gold is going to 5,000. It may at some point, but 2011, it wasn't in the cards there. So a pretty sharp pullback from 1923 and ended up the year at 1567. So on the year, gold was up 10%. That continues the 11-year run, an increase each year in gold, and so pretty impressive. And if we go back in time, my prediction last year in this webinar was that gold was going to be up 200 on the year. I was close, but not quite there, and it was about $150, $160 increase on the year.
That's a good prediction, though.
It's not bad.
Yeah,
my silver didn't quite pan out, but so we'll move to that next.
That's a joke right there. It didn't quite pan out. You get it? Sorry. Thanks for identifying the joke.
Sure. Just trying to silver started the year at a spot price of $31.16, and by April 25th, we had reached a high of $50.02, a high not reached since the 80s. And monetarily, it's the same price that we reached in the 80s, but value-wise, still well below the inflated U.S. dollar. But there was definitely a psychological bear at that 50 level, as silver pulled back very sharply from that level. I remember trading at around that time, and the markets were definitely moving each day, big swings both ways. So silver ends the year at $27.91. That's an 11% decrease. And my prediction last year was that silver was going to be up from the level on the year, and obviously I missed that one pretty big. And so that just goes to show you that bottom line is none of us know where price is going to head. And so I've got a solution for that in a moment. Here's a quick chart on gold that shows you the movement over the last 10 years. Pretty steady equity curve. There's bumps in here. Here's that peak at a little above 1900, and then a pretty sharp pullback, but building a base here. And my opinion is gold's going to head higher, and I'll give you my prediction here in just a moment. So for those of you that are interested, I'll just give you a few of the highlights of how I trade gold and silver futures. I'm not going to give you every little detail, but if it's something you want to take with your methodology and potentially look at, then you can definitely do that. I start trading at 8 a.m. Eastern Standard Time. I end at 10 a.m. Eastern Standard Time, so it's a block of time that I trade. Power of quitting 1. In other words, if I get my first trade out of the chute is a winner, I'm done for the day. If my first trade, my second trade is if my first trade's a loser, second trade winner, I will take a third trade to try to get positive on the session. So that's what we call power of quitting here at NetPicks. And one other thing I want to throw out there is you want to be careful. The metals open up the pit at 8:20, and a lot of times you're going to see very choppy price action around that time as orders flood the market, and who knows what direction those orders are going to go. A lot of times you can get, if you have an open order out there, you might get snookered into a trade and stopped out very quickly. You might want to consider stepping aside for like 1 minute if you're not in a trade at that pit open time. So again, be careful around that time. And the one thing that I want to really kind of stress is that any system you have that you approach the market with should have dynamic stops and targets. And it's one of the things we preach here at NetPicks. Every system that we have just about has that mechanism built into it. The average true range on silver back on 5/12 when silver hit that that high of 50 was $3.73. Yeah. And today, in January of 2012, it's trading at 95 cents. That's a pretty big swing. And so the point I want to make there is you can't trade fixed targets and be successful with that diverging range. And you really need to have a mechanism of either stretching out those targets when the A target's big, or when the range gets big, or compressing when the market gets small, as we've seen here in January. One other caveat I want to throw out there on the silver futures is it's not for beginners. It's for intermediate traders to advanced traders. You're looking at a $25 per penny move, and so that can be, you want to make sure you have everything in a line, your trade psychology, the method you're using, that all has to line up. So it's not, again, a beginning market, and roughly you need a $25,000 account to trade that. So let's move on to a few things that I want to throw out there and my predictions for 2012 in the metals. One thing that you're starting to hear about in the news is the Fed going to implement QE3, Quantitative Easing 3? For those of you that aren't aware of what that is, I'll give you a brief definition, but obviously if you want to know more, just Google the term either QE3 or Quantitative Easing 3. So basically this is a time period when the Fed will start pumping money, quote unquote, into the system. They will be buying back our U.S. bonds, the bonds that no one else wants to buy, that China has said we're not going to buy anymore. So basically what happens in that process is the dollar devalues, and what happens to gold and silver and a lot of the other commodities in that scenario? They go up, okay? So here's a few of the headlines from, I mean, you can find them all over the place, from MSN, from Forbes, that started to talk about the potential of QE3. My opinion, if I have to make a prediction here, is that at some point in 2012 we will see QE3. That's my prediction, and so we'll see if that comes to pass. Let me talk a little bit about what happens when that process engages in the market. This is the silver chart from 2010. And right here where we get the hints, the news starting to look at the possibility of QE3, the market here started to head extremely strong to the upside. That's a strong uptrend to the upside here. Then finally on November 3rd of 2010, QE2 was now announced. And I remember this day. I was actually trading options this whole way up here. And I remember that day when they announced QE2, the market reacted to the downside. I remember thinking, oh, here we go. It's, the news is out. It's going to, at this point, turn down. But look what happened. I mean, we had a strong move to the upside for the rest of the year. So what I want to point out there is if we get closer and you start to hear more about QE3 or some kind of quantitative easing, then you might want to consider playing some options on gold and silver, as they probably, the markets in that time will probably pick up and become more active. The good news for the futures trader traders in this market is if that happens, I can almost guarantee you the markets are going to pick up and perform very well for us also. So here comes the prediction part of my presentation. I'm going to say that gold's going to end at 1900 for the year. And I think it has a very good possibility of breaking 2,000, heading above 2,000 at some point, but then we'll pull back. And I'm going to expect the same thing for silver. I think silver could potentially go up and touch, break 50, and then probably settle back below at some place. So I'm going to predict 45 on the year. So that's pretty much my quick presentation on gold and silver for 2012.
Great, thanks, Brian. That's good stuff. Appreciate that as always.